Hi, today I want us to look at income tax. The question here reads, income rates for income earned were charged as follows. So we have the table right there. A civil servant earns a monthly salary of 19,200 Kenyan shillings. His house allowance is 12,000 shillings per month. Other allowances per month are transport, which is 13,000, and medical allowance, which is 2,300. He is entitled to a personal relief of 1,240 shillings per month. Determine, then part A. Roman 1, his taxable income per month, and then Roman 2, the net tax. Before we move to part B, I want us to do part A. Roman 1, we are told to determine his taxable income per month. Note that taxable income is obtained by taking the basic salary and adding it to all the allowances. So the basic salary here is, we are told he earns a monthly salary of 19,200. So we have 19,200 for the basic salary. That will be added to all the allowances. So we have house allowance, which is 12,000. We add that to, so we have transport allowance, which is 13,000. And then we also have medical allowance, which is 2,300. And when we add all these, we should get 46,500 shillings. And remember, this is per month. Next, we are required to get the net tax. Remember, this is just an instruction to carry out tax calculation. So whenever you see the word net, then that means the value that remains after some deductions have been done. The opposite of net is gross. Gross means total. So when I say gross, I just mean total. And the opposite of total is net. So before we deduct anything, we have the gross. After deduction, we remain with the net. So that means if we are to calculate the net tax, we'll say net tax is total tax minus something. So we have total tax, which we can also refer to as gross tax, minus relief. So you identify all the reliefs that you have and then you subtract from the total tax. That means from this, we need to know what the total tax is. For us to get the total tax, we will be required to use the taxable income here to carry out taxation. And as we use the taxable income, care needs to be taken. It is Kenyan shillings per month, and that should match what we have under the income column here. Income in Kenyan shillings per month, and it matches exactly what we have here. Then you are good to go. We make a table. On the left hand side we have taxable income, and the right hand side, let's have the tax. So let's begin with the first band. In the first band, let's take this 8,400. So in this band, we are going to tax that at the rate 2 shillings per 20 shillings. So that should mean that we will multiply the rate 2 shillings and then divide by 20. So that is what we mean by Kenyan shillings per 20 shillings. Let's do that so that you see it clearly. So in the first band, we had 8,400. And then we have to multiply by 2 shillings per 20 shillings. And when we do that, it should give us a tax of 840 shillings. Remember, the result here is still in Kenyan shillings. The next band we are going to have 18,000 minus the previous one, 18,000 minus 8,400, that is 9,600, and then we'll multiply by the rate there. The rate here should be 3 shillings per 20 shillings. 3 shillings per 20 shillings. When you work out this, we get 1,440. The next band, we have 30,000. As we continue, just consider if the value is still less than the taxable income. For our case, taxable income is 46,500. And for this band, 30,000 is still less than 46,500. And that means we will continue. So we take 30,000 minus 18,000, that is 12,000. So for the next band, we will have 12,000 multiplied by the rate there, and the rate is 4 shillings per 20 shillings. So 4 shillings per 20 shillings, and that should give us 2,400. And the next band, we have 36,000, which is still less than the taxable income. We subtract minus 30,000, that is 6,000. So the next band, we have 6,000. We multiply by the rate there, and the rate there should be 5 shillings per 20 shillings. And that should give us 1,500. Next band, we have 48,000. Now 48,000 is above 46,500, which is our taxable income. And for that reason, we are not going to use 48,000, but instead we are going to use the taxable income, which is 46,500. And when we get the difference, 46,500 minus 36,000, that should give us 10,500. So we have 10,500 multiplied by the rate there, which is 6 shillings per 20 shillings, and that should give us that is 3,150. Well, I want us to take note of this, which is very important. When we add the whole of this on the left hand side, it should give us the taxable income, and when you add the ones on the right hand side, the total should be the gross tax. So say gross tax or total tax, they mean the same. So gross tax should be the sum of these, which when we add, we get 9,330. Okay, but in the equation, we are required to get the net tax, and from the equation that we had determined earlier on, net tax therefore becomes the gross tax, which is 9,330 minus relief. And so far we only have one relief here, the personal relief of 1,240. So that is what we subtract, 1,240. And when you do our deductions, well, we have 8,090 Kenyan shillings per month. So let me write that per month. For part B, we are told, in addition, the following deductions were made: NHIF of 230 shillings, service charge 100 shillings, loan repayment 4,000 shillings, and cooperative shares of 1,200 shillings. Calculate his net salary per month. Once again, we are meeting this word net. Now we need the net salary. That means we must have been having the gross salary, so that we deduct something to remain with the net. So net salary is equal to gross salary minus deductions. Now let's take note of this. When you talk about gross salary, In some instances, the gross salary will happen to be the taxable income. But in some cases, the taxable income will be different from the gross salary. That is because there are some instances a civil servant can be provided with a house at a nominal rent or even freely, and in such cases we use 15% of the basic salary, which is added to the basic salary, and then we subtract nominal rent. So when we have such a scenario, that taxable income can never be used down here when it comes to calculation of the net salary. It is purely gross salary, and the gross salary will always remain to be basic salary plus allowances. And for this case, because the civil servant was not provided with a house, then say the gross salary is the taxable income, which we have as 46,500. And then our number one deduction must always remain to be the net tax. That is the pay as you earn. Net tax is also known as pay as you earn. So let's have the first deduction, which is 8,090. The other deductions, as we are told, are NHIF, which is 230. We also have the service charge, which is 100 shillings. We also have loan repayment of 4,000. And finally, we have cooperative shares of 1,200. When all these are worked out, we'll have, this is 46,500 less 13,620. And finally, that should give us the net salary of 32,880 Kenya shillings. Well, that is it for this question. Thank you for watching. Hope to see you in the next video. Bye.